G'day everyone, welcome back to Pete's Investing. Today is April 29, 2023. This is the natural gas price update. You can see here on the weekly, the daily and the hourly, we're still undecided in terms of direction with these moving averages. Let me drill down to each of these. First on the weekly. What I've got here in this indicator down here demonstrates to go short or long, and what that does is it marries the moving averages of the CCI 150 down here and also the moving averages of the price chart. And those moving averages are the moving average 60, moving average 3 and 5 of the price chart, moving average 50 and a moving average 5 of the price chart. So at the moment there is conflict between the two moving averages and they're not aligned, which is giving us an indecision in terms of which way to trade. So on the weekly it's saying avoid trading at the moment until we see a consistency on both moving averages. On the daily, the same methodology applies, but notice on the CCI 150 there is a bullish divergence, whereas on the price chart there's a bearish divergence. So at the moment this hasn't failed, and for this to fail we need to see the CCI break to the downside, and by then we'll probably see the price either collapse and break below this support area. I've got this support here at 2064, this blue line, and this red line at 3050. But again, we need to see either the CCI or this divergence fail, or for it to work out we need the price to break to the upside and most likely break above that resistance at 3050. So that's the daily chart, and it's undecided in terms of our combined moving averages. On the hourly, this is where you would probably take trades on the lower time frames based on the daily and the weekly time frame. But what I've done here, you can see there, that's the bigger time frame there, and I've zoomed in here. You can see here between that high and low, I did have a Fibonacci retracement, and it was bouncing off the 50% a number of times, and it finally broke to the upside. And in that wick there, it broke above that recent high at 2504. So that's a slight positive, although just be mindful, again, we're still in this divergence we're talking about, and that may break to the upside. But as well, we've got this minor resistance forming at 2572. So that may be that's a resistance at the moment, so it could bounce to the downside from there, and it has done so from those wicks, but we need to see it break above that more closely in the coming days, and especially we want to see it going back to the daily. We want to see this divergence play out and break to the upside on the price chart, and most likely break above this resistance to be more bullish. So at the moment, suggest holding off going long or short until we're more confident about either this failing or this working out and breaking to the upside. So to understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and support us on Patreon. Thanks for watching, and see you in a future video.